The following is a pre-recorded show. Welcome to Winning in Retirement with your host, Brian Akers, certified financial planner professional and founder of Akers Financial Group. Now, helping you win in your retirement, here's Brian Akers.
Hello, I'm Brian Akers from Akers Financial Group. And here with me today is Alex Monk, also from Akers Financial Group. We are both certified financial planner practitioners. And we're here hosting Winning in Retirement. How you doing there, Alex?
Oh, Brian, I'm great. How are you?
I'm doing okay. So today we're going to talk about this topic. Are you retirement ready?
Why?
Alex Monk, are you retirement ready?
No, I am not.
And why not?
I have not put in the work, man. I'm only... How old am I? Oh, man.
Yeah, let's not bring up ages right now, because then you'll start talking about my age and back and forth, and then I'll say, like, are you retirement ready? And you say, are you retirement ready? Back and forth, and we're like, let's change subjects to something else. All right, imagine you're driving that car, you're running around the roads this weekend, and you're thinking about things, and then some radio guy gets on there and says, are you retirement ready? And you're driving your car and like, oh, am I?
Your wife slaps you in the arm. Are we?
Or dear, you got that handle, don't you? That kind of thing, right?
I mean, that's not a fun thing to hit it, to have it just brought on you like that, but it's a real thing.
It's extremely real at certain ages in life. Now, Alex is obviously younger than me, and he's probably not at that age. Alex and his wife had a young child. It's a year old. They have a lot of hopes and dreams in the child right now. Retirement's probably further in your mind than day to day, right?
Well, wherever it's in my mind doesn't really matter because the reality is quite far away.
It feels far away until you're my age. And when you get to my age, are you retirement ready? He's like, oh, yeah, I really need to make sure I'm okay, that things are lined up, that I'm planning ahead for those things. Reality is this. Are you retirement ready? The only one's going to care about the answer to that is going to be you and your family, because you're the one that has to draw the money out. You're the money that's going to be happy with what you prepared for. So being retirement ready is truly being financially independent and knowing that you're okay.
And how do we know that? Like, is it just this number? Everyone has the same number?
I don't know. The reason I was going to say I don't know is because I told you I was going to fool around a little bit on the show today, because the answer, and from many people, comes with their opinions rather than the facts. Like if you go to the retirement lab, and we had our magical lab where we're going to calculate and figure out you're ready to go, we'd have to talk about and have a show about, well, how do we get people ready to say they are retirement ready?
Yeah, my favorite term is financially independent.
I agree. Financially independent, what does that mean to you?
So to me, that means you're okay. You're going to be okay whether you work, whether you don't work. It's up to you. But you've done the prior planning. You've saved your money. You've been a good steward of it. You've invested. You know your numbers, and you're ready.
Correct. So that's all about the financial side. That's all about retirement ready, because almost everyone says, oh, yeah, I'm ready to retire tomorrow. But then the reality is they're not financially retirement ready. Now, to be financially retirement ready, you got to go over some thoughts. You need to have these kind of thoughts. Do you have a cash flow plan? Money coming in, money going out. Do they match? Does it work out? Is it a positive cash flow? Is your expectation okay? Is it reasonable? Have you designed some type of plan for your cash flow? Are you really emotionally ready to retire? That's different. People say, yeah, I'm ready to retire. And then reality of retirement date comes on and they're like, hold on a minute. I don't know what I'm going to be doing. So knowing what you're going to be doing in retirement is important. Where are you going to live? Are you going to downsize? Have you told your kids you're moving in? Have you picked out an RV? Do you have picked out a state? There's all this pressure of things to think about when you think about retirement and this dream of a retirement.
We're supposed to be relaxing.
Supposed to be. But I'm stressed out thinking about it.
Well, I mean, you hit on a lot of topics there. Like the first one, cash flow.
Yes.
Like that is one of the biggest deals in retirement.
Absolutely.
Because if your money's not coming in your bank account, I don't care where it is. If you can't spend it, it's not doing you any good.
You have to be comfortable and have the lack of stress because it's planned out. And you know the flow coming in is going to meet what you have planned for your normal lifestyle, and that you have that organized and you're ready.
Yeah, and it really is the goal to get that client from that nervous state to that state where they're like, a year or two in, and they sit down in the conference room and you just see that weight off their shoulders.
Yes, you can tell from the edge of the chair versus leaning back, when they're actually leaning back and understanding that Yeah, the checks do flow in. The investments are working. Taking less risk in retirement is the right thing for me. I don't need to double my portfolio this year again or day trade to try to reach that dollar I need for next month's bills. You don't need to take that kind of risk for your retirement years.
And it's good to see, like, as clients get older, a lot of them, they start to realize these things, and they're like, "Hey, Alex, I'm done with trading this account all day. I got pickleball, I got golf, I got this I got to do."
Yeah. Well, you actually had that conversation with one of our clients who decided to become a Florida only person.
Yep.
And you had the conversation. He was a day trader, right?
And pretty good apparently. I guess.
We're not going to dive into that too deeply. We're going to cover the idea that our clients, we have money, we invest for them, and sometimes they have accounts. Sometimes I call them play accounts. They don't like me to use that word. They might say, well, that's what I'm doing now. I'm retired and I day trade. Okay. And my answer is, can you afford to lose all of that and still be okay for retirement? Because we want to take the least amount of risk to reach your retirement goals with the portfolios that we design for our clients in their retirement years.
Yeah, I mean, I don't want to take any big losses for clients in retirement. Those are the hardest things to make up.
Have you ever done the math of that, Mr. Alex Monk? The math of a big loss?
I have. And the younger the client, the worse the math.
All right, well, just tell me some basic big loss math.
Well, if you go down 50, you got to go up 100.
If you go down 50%. So if you have $100 and you go down to $50, and then you got to go back up to where you were. So you're in a hole and you got to come all the way back just to where you were, not making any profit. You got to do 100% just to catch up on the loss.
That's a big number.
Yeah, it's like if the market went down 25%, then you got to come up like 33, 34% the next year just to get back to where you were, not making a profit.
Right. So let's imagine in that scenario, right? You're retired. You take a big loss.
Yep.
You still need to eat.
Yep.
So then you take another withdrawal.
At the low.
And
there's not as much money there to ride it back up.
Right. So then your math is extremely difficult. I mean, you're trying all types of functions on your calculator, but you're not liking any of the numbers.
And the reality is you got to cut out the potential for big losses in this money that we're going to count on for our retirement years. So how you invest this, how you build the plan in your retirement is a big part of being retirement ready. Retirement ready means I've grown and built. I do need to keep up with inflation with a portion of our money, but not all the money. You need to have an income and cash flow plan built into this to make sure it works.
Yeah, and my favorite thing to do is to create a ladder, right? To create things that are going to be coming due that are automatically going to happen for things that we know for sure in retirement. Because we have to plan for the things we know are going to happen because there's so many other things that we can't plan for.
All right, I'm going to change subject just a second. I got an off-the-wall question, and I did not warn you about this one. I thought it would be more fun this way. All right, so the client comes in, and they want to say, am I retirement ready? We have one client that makes $100,000 a year and one client that makes $500,000 a year. Which is the easier client for you to try to answer, are they retirement ready?
100,000.
And why is that?
So let's just say you make $100,000 and your retirement income need is going to be 70% of that. So okay. 70,000 for round numbers. All right. And you've been making $100,000 roughly your entire career. So your earnings record on Social Security is pretty high. Mm-hmm. So there's another third of that money, maybe $30,000 a year that you're going to get from there.
Sure. So the real need beyond that's 40,000.
Right. So that is a number that's
$1 million, right? $1 million produces on a 4% type of deal, retirement like that can actually grow with inflation over time, right?
Yeah. So that you just solved that equation right there.
That's retirement math. It seems easy with $1 million. If you have one Social Security total or combined of 30-some thousand, works out pretty well mathematically.
Right. Now, the other scenario, everyone's thinking, well, they make $500,000. That should be the easy one.
Oh, you have a couple million saved and you want $500,000. You're fine.
Yeah, but
what's the reality?
The math on getting $100,000 a year or more, in their case, let's say they want half their income, $250,000.
Okay, $250,000.
Let's just say it's before tax even.
Sure.
So Social Security, maybe $40,000, maybe $50,000 combined between two people.
Yeah.
At high end, right?
And you get 65, 70, depending if both had a great, incredible careers. That's the maximum I've seen.
And then, so let's say we have that, but then they're going to have high Medicare costs and IRMA and all that.
Yeah, IRMA is where your Medicare premium costs more because of its means tested based on your income. You pay higher tax brackets, double in retirement.
Yeah. So now you need 200,000 more. Mm-hmm. So that's a big number every year.
Absolutely. Now, 200,000. What's your minimum portfolio investment you like to have for that? $5 million,
at least.
Yeah, something like that. So when we design portfolios, we try to design income depending on your level. The more income you are used to living off of, and the more you think you're going to need in the future, the more you got to spend the time to create that. Yeah. So that you have a portfolio and a retirement plan that's going to last a lifetime. Are you retirement ready? Don't just assume you are. Don't just think you are. Know you are. Are you retirement ready? You got to sit down with an advisor and cover that kind of thing, right?
Well, it's better to know. I mean,
yeah.
I don't see how you could not. But that's just me.
Yeah, well, so it used to be How to Be a Millionaire was a pretty good thing, and have a show about being a millionaire. Now Powerballs are what, $1 billion? It's the big Powerball.
It's a crazy number.
I mean, people don't have to be a billionaire to retire, but they don't. Being a millionaire is going to be a tough number. The younger you are, $1 million is not going to be anywhere near enough if you think about it. Are you going to be retirement ready in your future? Well, you're going to have to plan it out. Figure out what you need to save today to at least have some chance of retiring at a reasonable rate.
And people, they forget about the fact that the pensions that the prior generations had were worth huge money.
Yeah, a good pension's worth $1 million, $1.5 million minimum of money invested.
Yeah, so it's like we forget about these big numbers because we're shifting between cash flow and net worth and all these things. But we got to figure out how to plan them together and get our cash flow right.
And that's exactly what we try to do at Akers Financial Group: is sit down and talk about where you are. What is your plan when it comes to this? Are you retirement ready? We're local. We're independent. We don't report to a big company on Wall Street. We report to you. We do have offices in Lutherville and Forest Hill and clients all around the country and even a few around the world. It's so easy to begin winning in retirement. Just give us a call and schedule your meeting with one of our team of advisors. Call us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. We'll give you a call on Monday to schedule your free in-person or Zoom meeting. Go to AkersFinancialGroup.com or call us at 833-946-7384 to start planning for your retirement now. Where will your income come from in retirement? You'll find out in the second quarter when we come back.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers, and today I have with me Alex Monk, certified financial planner, investment advisor, a stockbroker, as an insurance agent, lots of different licenses. And Alex has been working with me for 11 years now. You ready to go here in the second quarter, Alex?
11 years, wow.
Yeah, I'm sorry about that. It's the timing of life.
That took me off guard, but I'm ready.
I tell you, the first couple of years, like year by year, and then it starts going by fives. 5, 10, 15, 20, 25, 30. It's going to be quick.
It's been wild.
Guess what? That's the way retirement is, though. When you think about retirement in the future and you ask yourself, am I retirement ready? You go, oh, that's a long ways away. But I believe that the speed of getting to retirement goes that fast. You're 31, you're 32, you count your kids by months, and then all of a sudden they start getting later, you count them by grades. Then all of a sudden you say, oh, they used to be in school, or they used to be in college, and you went from 40 to 50, 55, 60, 65, 70, and all that is a blur.
Wow.
In reverse, if you think back and you say, I'm going to give advice to people out there about being retirement ready, you tell each and every one of them to save for yourself first out of your paycheck. Put that money and throw it to your future so that you have options in your retirement years to be retirement ready. This second quarter is about this. Where will your income come from in your retirement? Are you retirement ready? If we don't throw that money forward to be there so that you can then draw it back out in retirement years, you go to look for it, it will not be in the account ready for you.
And it makes it a lot easier when you start saving earlier.
Well, it's amazing. You start watching your account and you think, well, for a new person starting their job to get to 100,000 is a big deal.
It's a very big deal.
And the amazing thing is the compounding math of investing. So like if you have $10,000 and it doubled in investments over the last 10 years to 20,000, that's a really good return.
Right. But let's imagine that 10 was 100.
Yeah, 100,000, it would grow to 200,000. Now imagine you have someone growing their career and they get $1 million saved early in life and they get that complete double again in the market. And what would happen to that million?
2.
And then the 2 million becomes what?
4.
4 million becomes what?
Well, they got to retire at some point.
Well, the neatest thing is this. When you do financial planning for a long time, like I have, you have clients that come in and you go, oh, congratulations, you hit $1 million invested. That's a wonderful place to be. Then there's clients that came in and they're like, you tell them, yeah, we're at 2 million, now you're at 4 million. And things don't change a lot, except the fact that the growth rate was consistent and their portfolio was consistent over time because they made it a priority in their life. So where will your income come from in retirement? It's all going to depend on what you do. Do you stick with the job? Do you make the choices so that you can have income that you're going to count on in your lifetime?
Right. Do you have a pension?
Yeah.
I hope.
Well, a retirement financial fingerprint is all about things you get, like, do I get a pension, Social Security? Let's add those in, see what it's worth, and make sure you do your time. You got to get your 30 years in or 20 years in, 25, depending what your job is, and then you got that check coming in.
Well, and then you have options, too.
Options to pick.
Is it just for your life? Is it for you and the wife? Is it for, there's a lot of things going on, and everybody's scenario is different.
Yep, and that's why it's fingerprint. Everybody's fingerprint is so different. So where will your retirement income come from? Think about it. You're driving. You're out there thinking about, am I retirement ready? Yeah, I'm ready. Not really. I am ready. I'm sure I'm ready. I really think I am ready.
Well, and the biggest thing, right, about what you're saying there, Brian, it's a mental switch too, right? You're going from working your whole life, you're trusting your ability to earn, and now you're trusting the ability of your savings to provide. Mm-hmm. And that's a big switch for a lot of people. And if you're not comfortable with the logistics, this, that, and the other of wherever you're at right now, then you got to sit down with somebody that can really walk you through it.
Right. So a retirement advisor is someone that's going to help you be retired, help you cover the different aspects of life. And as we hit different ages, how the law will affect you and your money. And understanding how it all works together is how you win in retirement, is to know, oh, this is coming up. I'm turning 65 this year. I'm turning 73. These age changes are coming up. I have these kind of choices. Being proactive, listening to a radio show called Winning in Retirement is a proactive approach to that.
Absolutely. I mean, lots of gems in here.
All right. So Monk, close your eyes just for a second. You're in retirement. What's your favorite kind of income you want coming to you monthly?
Oh, I want tax-free income.
All right. Open your eyes again. Okay. And I did not tell you to say that in any way, but I knew you were going to say tax-free income. Now, why did you say tax-free income?
Well, let's just say that I'm in a 12% tax bracket.
Yeah.
And I need more money. And the only place I have to go to get it is my 401k that's all pre-tax.
Sure.
So taking that withdrawal out, let's say I need 50 grand. And now that 50,000 pushes me to the next tax bracket. Mm-hmm. So then I'm paying 10% more.
22.
And I have to pay the tax on top of that 50.
Yep.
So I'm at like 75, 80 right now.
Tax on my tax.
Yeah. I hate that.
You don't like sharing with others, I'm hearing.
Well, I do like to share with others. I don't like to share with the government, who shares with people, whatever.
All right, you want to choose the others.
I want to choose
share.
who I share.
Right, so tax-free means that you don't share with Uncle Sam in any way. You don't share to the state that you're a resident of. You end up using all that money. All that money is yours. And that's why the younger you are getting started, we like Roth IRAs, cash value life insurance properly designed. There are ways to design money that will be tax-free when it's time for you to start drawing money out.
And that 10% jump that I just mentioned, Brian, is a huge planning point for a lot of our clients as they retire, because there may be years where their income's lower, there may be years where it's higher, and we need to plan ahead so that we're not caught off guard. I want to take withdrawals on our terms, no one else's.
Absolutely. All right. I have a prepared remark I wanted to say.
Okay.
I thought this is it's not really funny, but it's more me being prepared and writing out my thoughts. I'm not one that likes to read a script line by line, but I'm going to try it. There's so much that goes into your income for retirement. It's best to work with an advisor. That's what we do for our clients. We help them determine where their money will come from. Because it's not just, open a folder, pull out a sheet and say, okay, let's draw from this account this month. There's so much that goes into it as far as taxes, and you have to get into RMDs. You want to plan before you're retired. If you're retired, you should work with an advisor and make sure you're drawing money from the right places at the right time. It takes an advisor to do that. Now, what am I trying to say when I bring up this little concept of an advisor and the guidance on the choice?
Well, that's really our goal. We're not telling people to buy this product, that product, this, that, and the other.
Right.
We're looking at their whole situation and finding out what are your goals and how do we make your situation and your money match up to life.
That is why we meet every year or twice a year with a client, is to see how they're doing in life, to know how it matches up with life.
So I have a client who's a parent of current clients, and that's how I found her. Yeah. She's a little bit older, and she always thinks something's wrong because I call her every 6 months.
Yeah. What's wrong?
She's like, I don't need to meet. Well, because her last advisor didn't talk to her once for 11 years.
Oh, my.
So she always, it's just different. And I'm like, I just want to see if you're okay.
Yeah. Yeah. Well, life changes. The investment portfolio changes when it comes to the markets, interest rates. There's lots of things going on. The laws, they're constantly changing that affect their clients when it comes to being able to win in their retirement years. And how do you know it all? I don't know how anybody does it on a full-time basis by themselves.
I would be scared. I mean, it'd be like cutting yourself in the yard and going in the kitchen and doing your own stitches.
Yeah.
And just sew it up. And you're like, yeah, it's good.
I was thinking, I built a financial planning company that's designed for helping people in retirement. I don't do that by myself. And the reason is that I can't keep track of everything. Yeah. I can't understand every law that's out there. It's amazing, all the information out there when it comes to making these decisions. The only way I know to make decisions is to talk about the client and to focus on their situation, where they are right now. And then you basically, through the talk, you get to a point where this is what you should do. And that's when you implement and you buy a product, you invest your portfolio, you work with us to design how to manage those assets to fit every goal you just got done talking about.
And the best part, Brian, is there's no two plans that are the same. And that's why I love waking up every day, because I never know exactly what scenario I'm going to run into.
And then it has to be flexible. Like the hardest part recently is that we have clients that need income based on travel and doing things, and then there's sort of the opposite when clients come in with medical issues and they're like, all right, I got these concerns this year, we're going to need money for this, but I'm not going to travel as much, but I need to fix my house up a little differently. I got to be ready to downsize. Some major issues when it comes to life, and that's winning in retirement is really being prepared for all of those. To be able to have your income match what you need that outcome to be is a very, very important part of planning.
Yeah, and it takes the burden off of family members or whoever would be there to pick up the pieces if things aren't planned for.
Yes.
And that's a big deal.
Yeah, you call your son in or daughter in there and you say, hey, I need help. Can you fix this? And then all of a sudden they're like, who's the advisor on this?
What?
I'd rather the approach be, let's have a family meeting. Let's talk with everybody at once and let's figure out what you need. And then we'll figure out exactly how to do it as life changes.
Yeah. And let's get on the same page. Let's make this money work for the goals that you want, because you work for the money.
Yeah, absolutely. We work for the money. They grow, they build. They really try to grow and get ready for their retirement years. At Akers Financial Group, everything we do is about you. Your retirement is as unique as your fingerprint. When you sit down with us, we start by taking a look at your financial fingerprint. We talk about you and where you are right now. What is your net worth? How do you invest? And how much are you currently earning? Then we talk about what you want your retirement to look like and feel like. That's your retirement fingerprint. Perhaps you've been sold something, regardless of whether or not you needed it. Not at Akers Financial Group. With us, your retirement money flows and follows your exact financial fingerprint. It's a retirement plan based on your unique fingerprint that determines where your money goes. It's not about us, it's about you. Give us a call at 833-WIN-RETIRE and schedule an in-person or Zoom meeting with one of our team of advisors. That's 833-WIN-RETIRE. Call us at 833-946-7384 or visit our website at akersfinancialgroup.com. Scroll down to the bottom of our homepage and schedule a meeting right there. Call us at 833-WIN-RETIRE or go to akersfinancialgroup.com. How much can you afford to lose in your retirement years? We'll discuss this in the second half of Winning in Retirement when we return.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
I'm Brian Akers, and today I have with me Alex Monk. We're both certified financial planner practitioners from Akers Financial Group right here in Maryland, but we work with people all around the United States. As financial advisors, we sit down and talk with people about their situation. A radio show is nice, but it's not going to give your exact situation. It's not going to be deep enough into your exact situation. We recommend that you give us a call. Check out our website, akersfinancialgroup.com. All right, Alex Monk, ready for the second half of the show?
Oh, yeah.
You warmed up, stretched out?
Yes, this is really my time. Like, it takes me a while to get going.
Okay, so you're not a first quarter guy. You're more of a halftime.
Yeah. Because I'm so large, like it takes me a while to get moving.
Oh, you gotta get sweating in the right way.
Yeah.
All right, so financial radio shows can be a fun thing to do, and we want to make sure it's good for you to listen to. So we're trying our hardest. And so today's topic is called, Are You Retirement Ready? We're not trying to be mean, not trying to be aggressive by saying, hey, you're not retirement ready, you better call us. We're doing the opposite way. Think about it. Are you retirement ready?
Yeah, and if that question generates fear, you should call someone.
Yeah, if you're not sure, have a second opinion where you sit down and talk about your exact situation to make sure you're okay. Now, what happens is emotionally, sometimes we look at our investment statements and we consider that to be our retirement analysis. Are we okay or not? It's
Things
up or down.
Everything's.
I can't retire. I can retire today, not tomorrow. Can you imagine being retired that way, where you're tracking your investments every morning to see if you can have a day, go out to eat or not?
I mean, I understand some retired people want to check their investments because it's part of their new routine or yada yada yada. But the market should have absolutely nothing to do with day-to-day life in retirement.
It shouldn't. I have to agree with that. The hardest part is you don't want to be nonchalant about following the market and tracking, but you don't want to be where you have to look at it all the time, where it's affecting your emotions and your money all at the same time, because that means you're probably taking too much risk. And so we built this third quarter of the show about this question. How much can you afford to lose in your retirement years?
I mean, everyone would probably say zero, or they don't want to lose.
Well, that's what people tell us in that first meeting. We say, well, how do you feel about risk and losing money?
I just don't want to lose.
Okay, well, Brian, I want you to design an investment that's going to go up, and I like to beat inflation, but I never want to lose. And I want to be able to have it fully liquid whenever I want the money. And I'm like, it can't happen. Investments that are going to grow always and beat inflation always and never go down, that they don't exist.
Nah, there's no free lunch. Nope.
Now,
you have to give something up to get something.
There might be sales presentations that make it sound like it does that, but the reality is there's going to be a catch on any of those things.
Absolutely.
And you have to understand what you're asking for. If you have a portfolio not to lose, that's called risk-free. Risk-free, you get the risk-free rate of return. Now, you could call that a 2-year treasury note. You could call it a 10-year treasury as a risk-free, depending on the conversation you want to have. But generally, risk-free means zero risk.
Government bonds.
And this government bonds mean any type of growth.
It means you will probably not touch inflation.
Right, you're not going to be close.
And so inflation used to be this thing that was just kind of, out there, right?
Yeah.
Well, now it's real.
And it's real because in 2021, inflation was 7%. And then in 2022, we knocked it up again at 8%. And those were inflation numbers for those 2 years, a 15% increase. And that's not talking about going to the grocery store.
Right. So
that's an overall everything cost. If you just narrow food costs or some other pieces, it's been tough. You must keep up with inflation in retirement years to stay retired, right?
I mean, with the numbers you just gave, inflation would double in 10 years easily.
Yeah.
So that means if your car was 15 grand, now it's 30 in 10 years. Like, you're not even halfway through your retirement.
Yeah. The 15% over 2 years, at 15% a year, it's 6. So you're right. 10. I'll go with that. That's pretty good.
It's
A 7% average is 10 years. Things take the double. But generally, think about this. Are you retirement ready? Is your money retirement ready to last a lifetime? The true definition of investments is really for a lifetime, whatever your lifetime may be, if it might be short or a long period of time. We don't know our longevity, but we do need to make our money last as long as we do.
Yeah, and you always say, ever since I've been here, it's been a while, as you said earlier, but you say, let's plan for the worst.
Yep.
And then enjoy the best. And that really makes a lot of sense. Like, let's plan as if we were going to die today and live forever.
And that's what good planning does. We get rid of the things like, do you need life insurance? Do you need wills, trust, power of attorneys? Get that all knocked out. Your fundamentals of financial planning, get that done. And then let's invest the portfolio to keep it going. And it ultimately becomes legacy planning and planning for the next generation and all that, those kind of things, which can be a really fun thing to do.
Plus the peace of mind that you get with knowing you're going to be okay. Understanding this all is a big, big part of it.
Yeah, because it answers this quarter's question. How much can you afford to lose? Most people say zero. The reality is there is a volatility number within a plan. Some people are great savers and could take more risk. Typically, they might not want to.
Typically, the good savers are not.
And then the ones that need you to take risks are not good savers, and they have all their money earning zero, but they want it to grow at 10% a year. And it's a difficult answer trying to give them the answer they need rather than the one they want to hear.
Now, your question about how much can I lose in my retirement years? So I'm going to challenge that.
Okay.
In that the way that I like to set things up is that we have enough liquidity and safe money built in to never have to sell anything to get cash, to wait out the longest bear market, so it would be three to 5 years roughly would be the longest we've ever seen. So if we have 3 years of cash flow from places we don't have to sell assets, then we're not going to take a loss.
Yeah, that mindset for me happened around 9/11. It's about 2001. Everybody's working in their offices that Tuesday, and the hardest part was normal stockbroker advice is stocks, bonds, and cash. That's what I was taught at Virginia Tech and how you design portfolios. The hardest part is that when the market shut down that Tuesday, basically not economic, it was all terrorism. It was nothing else we can control. I felt horrible for my retiring clients because they don't have the years to come back that it might take after something like this, because we're waiting for Monday before the market came back again. And then the stocks and the bonds both went down in that 27% range on one day after 9/11 once the market reopened. And the reality that hit me was we need to protect a portion of your portfolio as you get closer to your retirement years. You need to make sure there's money that is not going to lose, but not all of it needs to be that way, just a portion of it.
And it shouldn't be all of it, right? Because, the portion that's not going to lose, you usually have to give up some time or, something like that, which
absolutely.
is a different way of investing, different type of risk.
Absolutely. So I grew up in Baltimore, listened to financial radio shows growing up, and one of the people on the radio used to say, take 100 minus your age, and that's the amount of money you should have in stocks. Then when the bull market was hitting hard or doing really well, he'd say 120 minus your age, and that was the amount you have in stocks. And the reality in that formula is that age is the percentage you should not have in stocks, is the way I read it. And so my talk 20-some years ago, and I keep with it, is age is your safety. Age should be your protected. Age should be money that we can count on, that we don't lose. So if you're sitting there retirement 65% should have very low risk to zero.
Now, and that's for, your typical client that has enough money for their lifetime.
Yeah, but not extra. Extra, you can design a portfolio to be more aggressive, even though they might not want to. There's other ways of designing as your portfolio and your savings grow. That's some wonderful planning ideas out there. But generally, the American person getting ready to retire, they save money and hopefully they have enough. It's real close to decide if they're retirement ready. It always comes down to what they spend and within what they have.
And it's crazy because the higher the income, the higher the need in retirement. I mean, you don't want to work and make X, Y, Z your whole life and then retire on Z.
Yeah, we've had a couple of those that came in. They're probably pulling in $300,000 to $400,000 a year, and then you tell them they're going to retire on 120. And honestly, it was hard to try to get them there. And I try to explain, if you work another year, we can knock out as many debts as possible so that you would not have a great fixed need in your expenses. Then you can live off the rest. And they've been retired 8 to 10 years, and it's a finagling. It's tough to keep the budget tight every year for them because they never did quite save enough. But we're trying to manage through all of that for the client.
Yeah, it's odd to see like the higher end earners. And sometimes they make so much during their career that they never really budget.
Well, there's so many topics right there. But the first thing is they don't really budget because they think enough's coming in.
Right.
The second thing is that their retirement at work limits what they can put in, so they're never funding at the right ratio that they need to. They might actually be called a highly compensated person. They might get their 401k thrown back to them where they couldn't put it in investment. Then they spend it instead of saving it, so they get behind on investing for their future. They don't take enough risk in their portfolios long term when they really should have 20 years ago, 10 years ago.
So a lot of things there.
Yeah, I could talk way too long about that one. But the idea when you sit down and talk about people, are you retirement ready? Everyone's a little different. But the answer comes down to simple things such as, what are your goals? What do you need this money to do for you? What do you want it to look like? And when do you want it to start?
Yeah. And you said something about like a minute ago that really hit home. Work an extra year, pay off lots of debts. Mm-hmm. Walk me through that.
Well, the idea is that, are you retirement ready? So say someone comes in and goes, hey, I want to retire in June. And we say, well, the first time we met, let's find out if you're retirement ready. And we're looking at the cash flow, and it's tight. If you start retirement and it's too tight, we then got to rethink and redo the cash flow so that you're not as tight. So you can absorb variable expense. You can absorb the cost of life in the future because you want to make sure you handle your retirement. Because the best part of retirement is going to be getting your time back, where you decide how to use it. Before retirement, your time is tied up with other commitments, mainly your job. A lot of that goes away in retirement. Your time is now consumed by things that you want to do. It's so easy to begin winning in retirement. Go to our website at akersfinancialgroup.com. Scroll to the schedule a meeting section and let us know you'd like to schedule your free consultation with one of our team of advisors. That's akersfinancialgroup.com. Or you can call us at 833-WIN-RETIRE, 833-WIN-RETIRE. We'll give you a call on Monday to schedule your free in-person or Zoom meeting. Go to akersfinancialgroup.com or give us a call at 833-946-7384 to start planning for your retirement now. Quick decisions have long consequences. We'll talk about this in the fourth and final quarter when we come back.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to the fourth quarter of Winning in Retirement. I'm Brian Akers, and today with me I have Alex Monk, Certified Financial Planner Practitioner from Akers Financial Group. You ready to go fourth quarter, Alex?
Let's do it, Brian.
Fourth quarter of the show is called Are You Retirement Ready?
I am not.
You're not?
No, I'm not.
Yeah, you ready to work the career now? You got
I'm ready to work.
A lot of work to do.
Let's grind.
Absolutely. It's hard for me to think about retirement because you enjoy your work so much. It's like, do I have to? Now, other people don't have a career like that. I'm sorry, I agree with you 100%, but the majority of people I see, they're like, not
Alex,
like that.
I can't wait to leave.
Right. It's the opposite. And so I'm not saying people don't like their job, but they have other things they want to do and they're ready to go. Some people might be 45, 50. We have clients like that we help and guide them into early retirement. Other ones that want to work or slow down, we guide them into that kind of retirement. Retirement ready? Well, what do you want it to look like? It's one of the hardest things you need to figure out. We think sitting down with a financial advisor is how you begin to figure out what it's going to look like for you and your family.
And then sometimes I tell people, I'm going to show you where you're at right now, meaning what you can sustain. Now you have to tell me if you can make that work.
We do not want to go into their finances and their monthly checking, their ATM and credit cards to see who should stop paying and who needs to stop going to Wawa or something. We got to plan out the whole idea of where money goes. The better all of us learn to control our money today, the better we'll be in our retirement years because we have good habits. That's not a normal American thing when it comes to finances, is good habits with our money.
It's like old dogs, new tricks.
Imagine we want you to be a saver.
We do.
And we want you to be a saver. Now, to save means that you think about something, you save money for it, and then you buy it. Sounds like a good concept.
Sounds difficult.
All right. That's the reality, is to have a plan and then to save and wait for it and do it in the future seems to be un-American.
Well, because most of the times, 3 months down the road, when you save the money, you don't want it anymore.
Oh, and that's the reality of spending is a lot of people, they'll buy with whims, they'll buy on a sale, or yard selling, whatever you want to call it. You drive by, you say, I want that.
Impulse.
And you drop the money, and then that money's gone, you take it home, and it's like, oh, I'll put that in the garage. Right. And it's still there 10 years later, and you got to get a dumpster to empty it out.
Yep. And you didn't get your money out of it. But if you would have waited 3 months,
you wouldn't have bought it.
Probably wouldn't have bought it.
Or if there's something that you wanted to buy a month ago, and then next month's like, I think I need it. And then you're like, oh, actually, that's 2 in a row. Maybe let's go for 3 before I buy it.
Yeah.
I don't have a magical formula on that. Like how many times you got to be reminded of the need before you do it. But 3 sounds like a good idea.
My hat drawer would be an indication that I'm not good at that strategy.
Yeah. Okay. So retirement reality or retirement ready. And the reality for me has been cash is bad. If cash is in the pocket, that means it won't stay there because that makes it's easier to get away. Yeah. And then, of course, credit card is something that people had a hard time with, the fact that you can just spend whatever you want there, and then they bill you later, and then you can postpone it.
Yeah, well, and I have no problem with people using a credit card. That's what I do, and I pay it off every month.
Yeah.
So some people, they come in, well, I charge everything on that card for the points, but you're also paying interest. So what are your points worth?
Yeah, it's the points is a fun game to say you're winning that way, but the reality, once you pay one or 2 months worth of interest, you're sort of lost all the bangs for the points.
Right, and then you get yourself in this kind of a spiral where interest compounds, and we want you to be feeling that same spiral, but on the upswing. Have your money compound, not your debt.
So if your interest on your savings and checking and CDs are starting to go up, imagine how fast the credit card interest has started to go up over the last couple of years.
Oh, yeah. Yes. I think some of it's like 30%.
I think so. I think they might have hit their max at 29 or something 29. Under the law. I'd have to read up on that. But the idea is this. Are you retirement ready? Well, where's your money going? Is the money going for your savings, or are you still paying off things you've did in the past? Are you earning interest, or are you paying interest? Those are huge differences when it comes to accumulating wealth. If you are earning the interest, earning the growth, and the dividends, what you're doing is achieving and growing your net worth for your financial future. Are you retirement ready? It's about how you handle the money on will you be retirement ready.
Yeah. And then you have to figure out what you're going to do all day.
Absolutely. That's
a big one for people.
Yeah. So this quarter, the topic to start out was quick decisions have long consequences. And we were talking a little bit about it, but you got a good story about that?
I do. So, the rule of thumb that we have is when a spouse dies, don't do anything within the first year.
Yeah.
Anything major. So this lady, I met her husband had passed. We waited I got her to wait 8 months. Mm-hmm. I couldn't get her to wait any longer. But she sold in Maryland. She moved up to Philly to see her, be near kids. The grandkids were of that age at that time where, right. Things were cool. Well, now they're all high schoolers.
Yep.
And, they're running around. They don't want to see grandma. And she's missing her friends and things like that. And it's tough to see a quick decision end up not always being the right one.
Right.
And I understand, like, she was making the decision. I tried to caution her out of it, but at a certain point, it's her money.
Absolutely. Like we started the show, I talked a little bit about downsizing or deciding where to retire in different states, have an RV or not, all those kind of things. And I have many different stories. I'll just do one simple one. One was where they decided they wanted to go south, and so they sold their house here to go south. And the conversation we had before they did that is the question I asked them is, when grandkids come, where do you want to be? Because I think you ought to consider not selling Maryland and buying the other location. Maybe you should have both for a while and test the waters and see if that's a good thing for you in your lifestyle. And they said, oh, we're just going to visit the grandkids. It's okay. Oh, within 3 years, grandkids started coming, and before I know it, they want to move back. They could not afford to move back to the area that they were. They had to go further north to be able to buy a house, to be able to be around grandkids, and they end up giving up everything about the South, living down south. So that's just a quick example of I want to go. It's time now. It's time for us. We're going to go. And then the reality is a short period of 2 or 3 years, you might want to rent and not buy.
Definitely. So now is kind of a weird scenario in that downsizing. You may downsize in size, but your cost might be the same.
That is the reality of a baby boomer generation where the demand on single floor living is higher than any supply that's around us.
And it's like, so many people, they come in and they're like, well, I want to downsize. And I'm like, okay, you can start researching that. But I'm going to tell you, it's going to be a lateral move. And if you move somewhere with an HOA, let's say you're going cash to cash, your expenses go up.
Or you move in these communities that they hit you with a ground rent, and the ground rent doesn't go by inflation. It goes by inflation times 3 or whatever. So knowing your future plans and tying it in and understanding that quick decisions have long consequences. So if we actually move and sell our current state to go somewhere else, and we're not really locked in for a lifetime there, understand that it's hard to unravel and get back to where you were. So planning these decisions out, giving it time, testing the water where you go visit. You might want to rent an RV before you buy one. All these kind of things. Test these big decisions by using them and seeing if that is something you really want to do for the rest of your life.
Yeah, and people maybe think, well, I don't want to rent. I don't want to do this. Well, it's worth the money you spend in rent to lower your risk of making that bad decision quickly.
Exactly right. Retirement ready and how you're going to retire is all part of the financial planning and getting the right answer for you. So if an advisor is talking about this, we're not going to try to tell you what to do. We're just going to help guide you in some decisions and then make sure the money, the finances tie into it all.
Yeah. And be there. Like that's my favorite part about the way we work, Brian, is when someone calls and needs something, we're there. And I tell clients, there's no stupid question. Ask me the question before we make a stupid decision.
Yeah, that's really good. I know with the firm here at Akers Financial Group, we designed a team of people. So we have actual people that answer the phone, and then someone will talk to you over the phone. Even if we're recording the radio show, if we're out there on meeting to someone, whatever we're doing, there's someone here to answer that question and help guide you, because we teach and train all of our advisors to take care of the client. That is what we do here.
Yeah, and that's why I think we love our jobs so much, is because we get that, we do the right thing, and we get to spend so many of these good times with our clients. It's such a great thing to see people go through the huge milestones in life.
Absolutely. Now, when I was thinking about are you retirement ready and things that deter that, that's when you start comparing yourself to others or comparing portfolio rates of return, or you're around a crowd or a wedding or whatever the party is, and all of a sudden someone's telling about how great their life is because they did a certain thing. Have you seen that in financial planning?
I mean, that's got to be the biggest one that we see. How am I compared to everyone else?
Yeah.
Well, I mean, everyone that had your same job? Like, what do you mean?
My friend told me not to draw Social Security. Yeah. Okay.
My cousin told me that I should start drawing Social Security at 62. Yeah. Oh, who does your cousin do? She's a bus driver. Oh, interesting.
Yeah, so applying what's going on in your financial life is all about the financial fingerprint approach that we talk about, understanding where you are now and then what to do. Understanding where you are now is all about financial planning, putting all of those things you've saved all together and getting a clue about what's going on, and then setting these goals so you can achieve them. If you set them, then you can achieve them. It's just part of it.
It's like those team building exercises where these clients, they show up with all these popsicle sticks.
Yeah.
And they're trying to make a bridge. And we're the ones that are going to help them. We just got to figure out the best way to make whatever they have fit together to get them where they want to be.
Absolutely. So Akers Financial Group is designed to do this, to sit down with you, and we offer a free consultation to those that are listening to the show, and they can go through our website, akersfinancialgroup.com, or if they give us a call at 833-WIN-RETIRE. Those are the ways people can reach out to us. Now, the show, Alex, was called Are You Retirement Ready? We hope everybody is, right, Alex?
I hope so.
But if you don't feel that way, you can give us a call and sit down and talk about your situation. That's extremely important. We want you to win in your retirement. So take advantage of the opportunity to begin planning with us at Akers Financial Group. To schedule your free meeting with one of our team of advisors, go to our website at akersfinancialgroup.com. Scroll down to the Schedule a Meeting section and let us know you'd like to schedule your free meeting. That's akersfinancialgroup.com. Or you can give us a call at 833-WIN-RETIRE. That's 833-WIN-RETIRE. We'll give you a call on Monday to schedule your free in-person or Zoom meeting with one of our team of advisors. Start planning for your retirement now. Go to akersfinancialgroup.com or call us at 833-946-7384. Thank you for listening. I'm Brian Akers from Akers Financial Group, and we want you to be winning in retirement.
You've been listening to Winning in Retirement with your host, Brian Akers of Akers Financial Group. Akers Financial Group offers securities through Archedios Capital, an SIPC and FINRA member firm. Advisory services are provided through Archedios Wealth. Akers Financial Group and Archedios do not share any common ownership. Neither Archedios nor Akers Financial Group provides tax or legal advice. Advice given on winning in retirement is general in nature, and one should seek further advice from their financial advisor, broker, attorney, and or tax accountant before investing. Be sure to read each prospectus carefully to understand all the risks associated with each investment. Examples and scenarios shared are meant to be for illustrative purposes only. Past performance is not indicative of future results.